Hello, everybody. I don't seem to have any chat for this. I don't know if anybody else has, but I don't see the chat box for some reason. Coming up. Where are we? Live. There's no chat. Why is there no chat, YouTube? So, I know it's awkward, but until I can figure out why there's no chat, I think today we're going to have to use Discord. So I will keep the members only or general chat or wherever you want to chat. I'll keep that open basically because obviously I can't see the chat that you're saying for some reason. I don't know why it's not there. These streams are really good, aren't they? I'm so professional. I'm just going to move the stream window over. No, I can't put it there. Oh, Christ. I'll put it down there so I can actually see Discord. So I've just got to move stuff around. There we go. Right. Okay. So just let me know that I'm streaming. Somebody just go and type in Discord that I'm actually live. I'm pretty sure I am because I can see myself here. But I have no idea if anybody's here. I can't do a roll call because there's no chat. Anyway, we'll see what happens. So is anybody there? Anybody in Discord? If not, I'm just going to say stuff anyway, and we'll carry on with the session. Hopefully, if you've got any questions, ask away. But if not, the comments section's on, and I'll have to figure out why the hell the chat's not there. It was there yesterday, obviously, but it's not there today. So today we are going to cover Quant Analyzer. So we covered yesterday, obviously, the backtester and using backtests and doing backtests. So when we do backtests, we need a way to figure out how to analyze the results of them. So I'm going to run a few tests. Yes, you are live, and we have the chat on. What? Where is it then? Chat is disabled for this live stream. YouTube is just, I'm fast losing the will to live with it. Sorry, chat, refresh chat. Chat is disabled. So I'm just going into my stream. Is there? Oh, there's chat. What's it doing there? Why can't I see it on the thing? Sorry, let me just see if I can pop this out. Pop out chat. I have you. There we go. Sorry, learning stuff. Shut that down now. Right. I have chat. Hello, Forex Fire, Yusuf, Evil, Jules. Right, that's good. We can see people. There we go. I don't have chat, but I think it's on my part. I need to do some Googling, basically, to figure out what the hell's going on with it. Excuse me. Right, so Vitaly, hello. In this session, we are going to cover Quant Analyzer. So I'm going to do some back tests. I'm just going to run some back tests to get some data out. So I'm just going to pick a set file. This is not a good set file. I need to do this on 15-minute time frame. Let's just see what this does. I'm just going to quickly run a test over the last year here, just so I can get a test out on the pound US dollar. And then I want to do more tests so that I've got multiple back tests. So what we're going to cover is how to export the data out of a strategy test and what Quant Analyzer is telling you about the strategy test that you've done and how to basically optimize based on the information that Strategy Quant gives you. The other thing about Strategy Quant is it allows you to do portfolio analysis. Now you can do this in MT5, portfolio analysis, i.e. run a test on multiple currencies at once. But as we covered yesterday, the data in MT5 is not verifiable. You have no idea where it's coming from, the quality of the data, or any information. So the reason I use MT4 is because I want control of data, and I want to be able to test properly, basically with data that I can check. So the reason I use Quant Analyzer is to create a portfolio, which I'm going to cover as well today. So that's not a bad equity curve. We'll use that. So let me just save this as GU. I'm going to run the same test again. I'm going to test it on, I don't know, test it on US dollar CAD so I can get that out. And then we'll put these together. I've got to update the history. We'll put these together and we'll look at basically what we're going to get out of Quant Analyzer. So when you're doing strategy tests, what you get is a list of trades, yeah, and then you get a report, which is obviously gone now because I'm running a new test. But that report gives you some key performance indicators. Isn't it very expensive, Strategy Quant? Yes, ridiculously expensive. Quant Analyzer is free, totally free. Strategy Quant is software development software. That is expensive, yeah. I've got licenses for that. But I don't use it. That's another video. But yeah, so basically we when we get the data in here, we get this report when it loads and does the test, which gives us those key performance indicators. Now, and looking at those, obviously we can tell a certain amount of information. But when we're doing strategy development, you don't just trade one instrument. So if you are going to develop a strategy for a single instrument, like a gold bot or an index bot or an oil bot, that's fine. But the vast majority of people trade multiple instruments, and you'll trade multiple instruments with the same strategy. So you need to see how your portfolio will perform. Perfect. A really crap result. That's exactly what I wanted. So that's US dollar CAD. Let me just quickly run on. I need something with non-confluence. Let's go Aussie yen, because that's really going to be bad. He says this creates a load of profit. So yeah, so basically we need to obviously test a portfolio approach. So when you're trading multiple currencies, you need a way to see what the overall equity curve is going to be for all of the trades that you would have taken, and your total drawdown on your account for the entire portfolio. Yeah. So as I say, when we're doing position trading in the live rooms, you trade what comes up. You don't just go, I'm going to trade pound US dollar, euro US dollar, pound CAD, US dollar yen, and something else. Yeah. You don't pick the instruments, because that restricts the amount of trades that you can take. If none of those 5 instruments you've picked set up anything this week, you don't make any money. That's no good. If 5 instruments over here that you're not trading give you the best setups in the world and generate 5% of profit, you missed them. So you trade what sets up, but you've got to be careful. Obviously, you don't overexpose yourself, which again we will cover in another video. But what this Quant Analyzer allows you to do is to take results from the back tester when they're done, and visually see every piece of information you could possibly want to know about how that strategy performed. And it most importantly gives you an insight into how you can improve the strategy, or how you could maybe filter it and eliminate the loss, which automatically improves the strategy. Just get this equity curve out as well. No profit. That's US dollar yen. I wasn't expecting that to make money. So there we go. So that's fine. We'll get that one out as well. There we go. So that's the report you normally get. Obviously, it tells us how much profit we made. It tells us what our drawdown was. It tells us how many trades were taken, and it gives us a rough profit factor. In this case, it's a negative, obviously, because it didn't make money. So that's great. It gives you that information. You can look at this equity curve and you can say, right, that didn't work. But looking at this equity curve, it's pretty obvious why it didn't work. You had 3 massive periods where it just didn't work. I've no idea what this is testing either. I'm just basically starting the EA at random to do just to take trades, basically. So just so we've got some data to work with. So when you've run a test in here, all you do is you click on the results tab, which let me just see if you can see that. Yeah, so you can't quite see that. But down here, obviously, you know, when the strategy tester, you've got the results tab, which gives you this list of all the trades. Right click, save as report, and name it. So I normally just name it the currency, whatever the currency is. Yeah, so GU, UJ, whatever. So you export basically that data, and that gives you these strategy tester reports, okay, which gives you all of the inputs for the EA, gives you the equity curve, gives you all the taken trades. Okay, so when you open Quant Analyzer, you've got the load report button here, and Quant Analyzer, let me just explain where to get it from. It's on the Strategy Quant website. Yeah, Quant Analyzer. So there is a paid version and a free version. Yeah, the paid version gives you access to loads and loads of other stuff, which is used mainly for those that use Strategy Quant for strategy development. Okay, what we're using is basically the Analyze section here, and that is free. So this is where you get it from. It's basically Strategy Quant. They are a software development company that basically make a piece of software that you can automatically generate thousands and thousands and thousands of strategies. I'm not going to go through it. I have spent years with Strategy Quant looking for ways to develop strategies on an automated basis. Don't know if it's just me or not, but I even worked with one of the guys that works there on this. I can't make it work. Reason being is I think there is just too much randomness in the way that the strategies are generated. There are ways you can use it profitably, I think, but the whole purpose of it is to create a diverse portfolio of strategies. It takes a long time and it's very difficult. So I'm not going to go into it now. We may do a session on it. I used to use it a long time ago in live rooms, but all you do is download that free button. So free version, you log in and you'll download Quant Analyzer. Okay. So when you launch Quant Analyzer, you get this page here, and at the top, you've got a load report button. Just move it down a little bit so you can see clearly. There we go. So you've got a load report button, and you literally just select the report or reports that you have just generated. So there's mine, GU, UJ, and UC, and click OK. Yeah, and then it'll ask you for your initial deposit. This is usually pre-filled by the software, but this is a $100,000 test, and you import a single result. Yeah, and just click that button 3 times and it'll import those 3. So you can now see down here. Let me just move. Let me move to no cam mode for a minute, just so that I'm out of the way. So you can see down here, we've imported those 3 strategies under strategy name here. So what this is going to do is it's going to give you a lot more information than you get in the strategy tester, even the one in MT5. Yeah. So on this screen here, we have the overall profit, how many pips it made, the average yearly profit. This is only a 1-year test, so it's not going to give you much more than that. The average yearly return, and the CAGR, which is basically, it's a return metric, basically. I don't personally use it, but it gives you loads and loads of other information: number of trades, the Sharpe ratio, the profit factor, return on drawdown. Remember, I was talking about that yesterday. Very important. Your winning percentage, the strike rate, overall drawdown percent, average daily return, average monthly return, average trade, loads and loads and loads and loads of data. One of the main things I use this for as well is when I load a strategy up that I've tested in here is this monthly performance. It's great to see how many times you're going to sit there and go, that didn't make money. Yeah. People see an equity curve. Or that's not a good equity curve, is it? Let's show the equity curve of the strategy. Yeah. Pound US dollar. People see an equity curve and they go, oh, this is brilliant. Look, it just makes money all the time. No, it doesn't. It has loads and loads of losing months. You're just not seeing them. Yeah. So this is a really good way of seeing that. January made money, February made money, March lost money, April made money, May lost money, June made money, July lost money, August, September made money September, October, November, December last year as well. Great. So I should expect 3 out of 12 months on average, and when you've done a bigger back test, obviously you'll have more data, but you should expect 3 out of 12 months to be losing months. So when you sit there and you go, it's losing, I don't think I'm going to use it anymore, I'm going to hop to another strategy, you should be fully aware that you are going to lose. It is going to lose, but it's why it's lost, which is what we can use this software to find out. Okay, so it gives you gross profit, largest win, all the usual data. Okay, so that is how you basically load up the results of your strategies. You can double click down here on the net profit figure and it will switch over from strategy to strategy. Yeah, that's got 19,000 loss in it. That's probably going to really skew what I want to show, so I might exclude that Aussie dollar yen result. It's probably the worst pair I could have picked for a mean reversion strategy. It's been trending like a lunatic for the last 12 months, isn't it? So ain't gonna work. But anyway, so you've got a template view up here as well, where you can view different versions. That's a portfolio view. That's the default view. Oh, that's not changing. Oh, there you go. So you've got, that's because I was on default view. So that's the default view, which gives you all that information. This is a portfolio view, which we won't see now because there isn't a portfolio being used. And a TS overview, which is a trade statistics overview, which gives you general information about it breaks your longs and your shorts down. So you can see instantly, what should I be losing? And what should I be making with this? How much on average am I going to make a day out of this strategy? And this is quite useful, especially if you are going to trade indices, because a lot of index trade strategies work much better long than they do short, because obviously indices are designed to go long. They're designed to increase year on year. That's the whole purpose of a stock index. So you find here that, you know, your average profit by day on your long trades is 77 and on your short trades is 238. Investigate whether or not this should be a short only strategy. Yeah, but for forex that's not going to work because currencies go up and down all the time. They trend up, they trend down. Stock indices typically trend up, don't they? So so that is your overview page. Okay, so I'm just going through all the settings at the moment. Next tab along is the list of trades. This gives you a list of every single trade that you've got in that strategy. So it's basically what you see here. Yeah. But there is much more data and it's sortable. Now, one of the main things I use this screen for, and this is kind of the process I go through when I list a strategy, I look at this and go, any red flags here? Holy crap, the drawdown is massive. Yeah, if it is, then you need to do something about it. Coming onto the list of trades, what I do is I double check the open time here and the close time. So if I've got a strategy, for example, opening range breakout strategy that should only be trading at 8 a.m. when the Frankfurt Open happens, yeah, and I see trades in here that are opened at a different time, there's something wrong with my test, or there's something wrong with my EA, or there's something wrong with the settings I've put into the EA. So this is like an idiot filter for you as a trader. Yeah, obviously we talked about garbage in, garbage out yesterday with data. If you input crap inputs into your EA, you're going to get crap results, right? So this is a kind of a filter for you to say, right, I have done something wrong, obviously, or this is why that result has been achieved. Lot size, you can sort that by lot size. Are there instances where we're taking ridiculously big lots? Is there something wrong with the risk? Is there something wrong with the data? Is there something wrong in the test that is skewing these results? I'm expecting it to increase lot size by 1.25%. It starts at 1.7 and goes up to 3.18. Seems pretty reasonable to me, so no alarms or flags there. Close times. One of the things that you can use this for, which is very useful, is if you have losing trades, if we sort by profit loss there, you can see all the losing trades there. If you have losing trades, which often trigger at 10:45 like this, that's fine. But if those trades are triggering at midnight, yeah, that is because you've been caught out by overnight spreads. Yeah, all of my EAs have filters in to filter out that little bit of overnight swap you get where they spread the market like crazy. You can see if there's any reason why you're getting big losses at specific times. A really easy filter to apply to a strategy that trades 24/7, 365 is remove any trades from 11 p.m. to 1 a.m. and all of a sudden you'll find a load of that loss that you have achieved, which has made the result negative, makes it profitable. Yeah, you can only see this by having all this data filterable like this. So that's a really good one to use. Profit loss, obviously. One of the things I use this for is sorting by losses and looking at time in trade. If you find that the vast majority of your losses happen after you've held it for a long time, and there's another screen that will show us this in graphic form in a minute, that helps us improve our strategies. So we can come in here and go, right, well, I've lost 5 grand in the last year because I held these trades for over a day. So put a filter on, shut them within 24 hours, remove that loss or reduce that loss. You won't remove it because instead of shutting it in 1 hour, 1 day and 2 hours, it will shut it in 23 hours. But it won't be as bad of a loss probably, which reduces the loss, increases your profit curve. Yeah. So it's all about data analysis. Time in trade is another really good one. Yeah, sort it by time in trade. Look for anything that is abnormal, right? If you take a trade and it exits within a minute, that is luck, pure fluke. What has probably happened is you've got into a trade as non-farm payroll triggered. Yeah, luck, remove it. Remove it from the results. Yeah, take 350 off the profit or whatever that profit is, because that ain't going to be repeating itself in the future. The chances of that happening again, very, very small. And likewise, filter it by time in trade long. Yeah. So are we holding trades too long? Should we be getting out quicker with our strategy? Are the vast majority of our losses coming at a certain amount of time that we've been in them? And again, we'll look at another screen which will give us this in a graphic format in a minute. Profit and loss. Any massive abnormal profits, any massive abnormal losses, yeah, outside of normal criteria. We talked a little bit about bell curves yesterday. When you're doing trades like this, we've got 114 trades here. So imagine a line here with 114 trades on it. What you're going to find is the vast majority of the trades, 70 to 80% of them, are going to fall within here. Yeah. You're going to have some which are abnormally large profits and some which are abnormally large losses. These are what we call outliers. These are not typical. Your typical behavior will appear in here. These are things like stupidly high spreads, wars breaking out, COVID breakout, taking trades 1 minute before non-farm payroll and then getting a 300 ADR move at non-farm payroll in your favor or against you, slippage, that sort of thing. So these are trades which are very unlikely to repeat themselves, but they may well do. But you can filter for one. So let's say, for example, you have an equity curve that looks like that. And you see a load of these on the marketplace. If you go and look at signals on the marketplace, you see loads of them that have got that. Yeah. The reason this thing made that much money is not because it's a good strategy. It's because it had 2 lucky trades. And those lucky trades made up 70, 80% of the profit, right? The rest of the time it's mediocre. Had 2 lucky ones. It happened to hit the sell button just as the COVID collapse happened. It's not anything to do with the strategy. It's pure fluke. You can filter for this information in here, yeah? Cumulative P&L is just the overall P&L. P&L in money is the same as profit and loss, etc., etc. Pips we don't pay any attention to because, as we know, pips are irrelevant. Yeah, we work in ADR and we work in profit percentages and everything else there. So you can sort it by obviously ticket number, which puts them into trade order. You can sort it by time, etc., etc. So that's basically the overview. So it gives you a much better breakdown of the actual strategy itself. You've got different views you can set up in here. You can customize it as well if you want to, but I don't bother. Defaults to long and short. If you wanted to say, I only want to see my long trades, you can filter by long only and short only. Again, Very handy for things like stock index strategies that might be long only. Yeah. Equity chart. Very obvious. It's your equity chart. It's this. Yeah. So this is obviously a different one, but make sure this looks like this, not that, this. Yeah. And the beauty of this equity chart is to find problems. Yeah. So when you see your equity curve, it doesn't mean this strategy is not great. It means that either something has happened that you had no control over in the market, a big move, an interest rate change we weren't expecting or something, and there's nothing the strategy could have done to make that loss any smaller or eliminate that loss. But you can check it. So go and find, and again, you can do this in here, look, in the trade, go and sort it by your P&L. That was the 22nd of March 2024. We need to go by date. And funnily enough, that is March 2024. Yeah. So why did that trade happen? Go and have a look on a chart. Come over to here, open up that chart and go and look at the 24th of August 2024 and find out what happened. It's there. Yeah, we had a whacking great day. Look, this is a mean reversion strategy using average daily range. Look at the size of the candlesticks. Look at the size of that candlestick. And what did it not do? Mean revert in any way, shape or form after that push. It made a massive loss. But we only had one of those there. And there's another one there on the 6th of September. I don't know, but I'm going to put a punt on that in September we had another loss. Oh, we haven't done up to there. But that's how you will verify basically your results. So in this screen, you're basically looking at your equity curve. The other reason this screen is good is it shows you anomalies in volume. So you have your volume shown down here. If you've got any whacking great spikes, which are ridiculously large and out of the normal average, you need to see why they're there. Is there a way that you can eliminate those? So the reason this one is here is because this particular set is going at 125 ADR scaling, 125% of the original trade when it's scaling in. And it's taking a maximum of 3 trades. So what would have happened here is obviously it would have pushed very, very hard. And it probably would have gone like that, triggering multiple trades. So you get a much higher lot size. So are there ways that we can filter this out? One of them would be to space the distance of the trades apart, which means that would be smaller, which would reduce that loss. Can we produce an equity curve which is good, but spacing about apart more spaced out with our entries? So this tells you this sort of information so that you can go and do further tests to see if you can increase the equity curve. So again, the settings you've got up here, you can have it go by trade, and that is again volume. So that's your lot size. So you can identify that, yes, it's pretty normal. There's no, this is nothing abnormal here, is there? It's just taking trades. It's not taking any which are ridiculously big. It's not taking any ridiculously small. It's normal. So again, it's a visual verification that everything is as it should be. You can switch it over to time, and it will also there down the bottom give you the ATR. So we're going to cover in robustness testing tomorrow the importance of testing over different robustness, different ADR periods. But you can add this to your chart up here by clicking this little second one in, which basically shows you volatility. So that basically puts that volatility down there, yeah? So it shows you what the ADR is. So if you're running a test and ADR is pretty flatlined and not moving much, it's not going to be very robust because you haven't tested it when the market's going crazy and you haven't tested it when the market's tiny and flat. If it is tiny and flat and it produces a negative equity curve, again, we'll cover this tomorrow, but you can filter that out by using ADR as a filter. Yeah. So you can also see a background chart of individual instruments. Yeah. So this is basically showing Euro US dollar and what happened to the Euro US dollar over that time. You can see it was very range bound. Yeah. If you have a period where the Euro US dollar was screaming up or screaming down in a high trend, and you notice that your equity curve performs badly during that period, you know that if there is a trend in play, this strategy doesn't work. So it is a mean reversion only strategy, and you need to filter out trends. And there's ways and means of doing that, obviously, as well. Does the ATR show Euro US dollar and not GU? Yeah. So basically, it will only show you what's going on in forex, what's going on in stocks. Yeah, we're not interested in the individual volatility of the instrument. We're interested in the volatility of the market in general. Yeah, so that's basically what it measures. It doesn't. In the paid version, it might give you more. I don't know. I haven't got it. But you can test SPY, Euro US dollar, Euro pound, and Apple. But you'll find that it'll be similar on all of them. Yeah, it's to filter out things like COVID and things like wars breaking out, things like stock market crashes, things like banks going bust. Yeah, the entire market. Not just forex, not just gold, oil, stocks, crypto. Everything goes crazy at the same time. So it gives you basically a number of options to say, what was it doing? You've also got the VIX here. So you can use the volatility index, which is the overall market volatility index. Yeah, so it will, but you'll find that they'll all be very much the same. It is either nuts or it's not nuts. Yeah, let me just quickly put a bigger, longer test on. Let me just run a test over, I do 2020, so I do a post-COVID test, so it's longer. We'll get that result out in a minute. So yeah, so you've got the volatility filter there. We covered this briefly yesterday, stagnation. You've got a stagnation filter. So when I'm running this strategy on this particular instrument, roughly how long would it be before it recovers a loss, a big loss in this case? Yeah, it took 108 days. So for 3 months, it didn't make profit. So when you're sitting there watching your P&L going like that, and it's not making money, shouldn't concern you, because you know that there are periods where it sits there sideways for months on end and doesn't make revenue because the market conditions are not right. This is a mean reversion strategy based on non-squeezy markets that you have nice market structure. This is ADR reversals, this particular test that we're seeing here. Yeah, when the market is trending like crazy, it's not going to do very well. It'll do all right when on pullbacks, but when it squeezes, it's not. Yeah, we know that, but you can't filter for the future. This is the problem with trading. Again, we'll cover this in another day, but you can't predict the future. So therefore, you cannot adjust your strategy based on what the future is going to be. So when you got here, there's nothing on the planet at that point in time that can say, hey, the market's going to trend for 3 months, turn off all your mean reversion strategies. But what you can do is make sure that your mean reversion strategies that are not suited for that market condition do not blow the account. That's absolutely fine. It means that we had a period where we survived trading a strategy that is not suited to this market. That's a result. Now we wait for the market to go back to being suited to us. Very, very range bound, not very range bound, very, very range bound, etc., etc. If this was a trending strategy, you would see a different equity curve. You'd see an equity curve that looked probably like that. Yeah, because if it's a trending strategy, it'll work much better in trending markets. If it's a breakout strategy, it'll probably work half decent in all of it, but it won't make much money because breakout strategies are hard to make profit out of. And again, we're going to cover that in another session as well. But stagnation is an important thing. If you see a stagnation like this, something's wrong. Yeah. So we started trading, we made money, and then we didn't make any. That's not good. Yeah. So this is basically a way of saying, right, I've got this wicked strategy. It works really, really well on the pound US dollar. It works pretty well on the US dollar CAD. Or does it? It doesn't work on that. And again, that is a beautiful example just by sheer coincidence of you run that test and you get that result and you go, this is brilliant. Look at it. I've got a strategy that makes money. No, it doesn't make money. Look at this. It didn't make money. It didn't make money. And it's had a couple of trades which have just tipped you back over the line in a year. So you'd run that test, you see $1,000 of profit, and you go, that makes money. But you have to be aware that for 357 of the 365 days, you didn't make money. Yeah, this is why this is such a good piece of software, because it gives you way more information than you're going to get in a normal back testing environment. You've got volumes here, which you can turn on and off, etc., etc. You can show your drawdown as money. You can show your drawdown as percentage of account. So there's other things you can visually put on the chart. But that's typically what I tend to keep on there, which is basically just the main sort of information. You've got a trade analysis page as well, which is incredibly useful. And the way I have it set up is P&L by duration, P&L by hour, general profit and loss for longs and shorts. This will automatically show you the profit year by year. And then you've got here a trades by duration chart, which is very similar to that one, just graphically different. P&L by weekday, and your wins and losses, profit by hour. So those are the screens that I have up. There are loads and loads of different views, but these are what I would class as the key ones for strategy development. Yeah, so I want to know, I've run a test, is there an advantage to me not trading on a Friday with this strategy? Yeah, so think opening range breakout strategy on stock indexes. If you run a test and every Monday it doesn't work, you don't trade Mondays, but you have to check that it's not just a coincidence, basically. But what you'll find is there are many markets that have little intricacies that you won't understand, or you won't see when you're just trading normally, that you will see in a back test like this. So for example, Mondays, market opens and it often gaps from Friday because you've had Saturday's events and Sunday's events which affect stocks. So you'll often see a gap. One of two things tends to happen on a gap. It either is a gap and go and fills later, or it's a gap fill on the Monday. So if you open up this and you've done a stock market EA test, and you see that every Monday, or rather Mondays on the whole, are negative, it's probably related to a market condition that you just are not aware of. So remove it, rerun it, and then we'll cover out of sample testing tomorrow, but do an out of sample test with different data timeframes that this has never seen before, but exclude the Monday. Was it profitable? Yes. Okay, then Mondays are not a good day to trade. Yeah. Forex, typically you don't find there's a lot of impact. Fridays, I always find usually, and it depends on the strategy, and it's very odd, but I often find that Fridays or Wednesdays in a lot of tests will be negatives, but they will also contain positive trades. So filtering them out as a time of day filter, personally, I think it's a little bit curve fitting, but for certain strategies, it probably is good. Oil is a prime example. Yeah. What do we have every day of the week, every week of the year, without fail, 3:30 on Wednesdays? Yeah. Crude oil inventories. Yeah. If you're building an oil strategy, yeah, that page there is going to tell you whether your strategy can or cannot operate over inventory releases. Yeah. If you find it doesn't work well on Wednesdays, you know why. It's because that's when the oil inventories are released, and you tend to get a trend change in direction basically on a Wednesday. So this information is critical for optimizing strategies. Removing your losses is the best way to make more profit. Not getting a strategy that works pretty well and trying to make the equity curve bigger. It's trying to remove this bit. Remove this bit. Yeah, remove the stagnation and the losses from the strategy. If you can find a way to do that, the equity curve automatically becomes bigger. Yeah. So again, time in trade, yeah, if you find that all the trades play out within 16 hours, yeah, anything that's held over 16 hours doesn't tend to work as well. Close your trades after 16 hours. Simple. If your data set is big enough, 2 years, 3 years, 4 years, it's unlikely that's a coincidence. It's likely that it just doesn't work. It's one of those strategies where it's a mean reversion strategy. If they have not mean reverted it within 24 hours, there's a chance tomorrow they're going to continue the leg. If they are, you shut it here. If you got in here, you take that loss. You don't take that loss. Big difference. Remove 50% of the loss because you close it in 16 hours instead of holding it until it gets to your stop loss. Makes a massive difference to your equity curve and your profitability. It won't necessarily generate huge amounts more profit, but it will remove enough that makes the strategy have a much clearer edge and easier, and it's easier to trade as well because you're in and out quicker. Your results are happening faster, which allows you to take more trades. And that's another thing that's important to understand about strategy optimization. When you're doing these amendments, it will have a massive impact on your number of trades. If you get into a trade on a Monday, yeah, and you hold it until a Friday, and then you exit on the Friday because either the trader's made profit or not made profit, what's happening is on most strategies, you're missing any trade opportunities on Tuesday, Wednesday, and Thursday because you're in a trade, yeah? If you get out of the trade here, you get a new opportunity to enter on a Tuesday or a Wednesday or a Thursday or a combination of those three. So by doing optimization based on results you get, it may look like it increases your profit curve by removing all of that loss. But what you're actually doing is completely changing the number of trades and therefore the profitability of the new trades that you've created. Yeah. So it doesn't always make a strategy better. You need to have that in mind as well. So when you run a strategy optimization and say close there and you go, why is the profit curve not gone up? Because it's taken a load of new trades it had never seen before, and a lot of those were losses because Wednesday's not a good day. Now you've introduced a load of trades on a Wednesday. Yeah. So it's a balancing act, but the only way you can optimize or develop a strategy is based on data. And it's got to be logically done. Otherwise, it's just not going to work and not going to make sense. So that's your trade analysis screen. You've got some settings in there. Portfolio creation we'll cover in a minute, and open balances you don't need to worry about. So basically that's the overview of the information that it gives you. So let me just quickly load this equity curve in. So this is pound US dollar. What am I doing? I don't want to save that. I want to save the results. So save as report. So this is GU 4 year. Make up the name. Okay, let's pop that in there. Okay, so now we've got GU 4 year down here. So you can switch between them by clicking on the P&Ls, basically. Yeah. So now you can see, obviously I've got more data. So I've got 2021. We made 1,800, 1,400, 14 grand that year, 13 grand that year. So far this year, we've made 9. The reason we made 1,800 that year is because we had 1, 2, 3, 4 losing months, and we had a number of little months in there which were tiny. 2021 is the year after COVID, just before we started the interest rate rally. Market was contracted. Mean reversion works on movement and reversals. If it ain't moving, you ain't getting reversals. Simple as that. Expect that to happen again in the future. You've got to know what's coming. Yeah. So we've had 1, 2, 3 losing months, 1, 2 losing months, 1, 2 losing months, 3 losing months, 4 losing months there. So on average, we're going to have 3 months a year where it fails. You know that now. So when you start the strategy in month 1, it makes a loss. You go, yep, that's fine. It's one of my 3. And you get on with it. Yeah. Stops your system hopping. It's one of the biggest things that changed my approach to trading was seeing visually what the hell I'm expecting to come. Because if you expect something to come, when it comes, you're not shocked. You don't panic. You just get on with it. Yeah. Drawdown happens, but you see drawdown happening over time, you will automatically accept it, or you should accept it. Trade analysis, similar, yeah. But now look, Fridays all of a sudden, they weren't profitable. Now they are. Bigger data set, much more smoothed data set, much more accurate results to make information on. So Friday's still not as good as the rest of the week, are they? Don't know why, but they're not. You could look into it in further detail if you wanted to, but that's profit at the end of the day. I'm 5,000 up. If I was 5,000 down, I'd be investigating it. Right now, I'm looking at this going, I can't see any reason to just not trade the thing. Brilliant. Yeah. So that's basically the basics of what it's showing you. The other thing I need to show you now is portfolio analysis. Okay, so one of the things that's missing in MT4 and in most traders' arsenals in general is the portfolio approach to trading, which is what I do all the time, which is position trading and portfolio. Yep. So I'm trading multiple currencies at once. Or multiple instruments at once and multiple strategies at once. But whatever you're using or doing, you can use this to analyze your overall performance. So we've got multiple currencies here loaded up. So what I'm going to take is these first, I'll put all three of them together as one portfolio, and then I'll create another portfolio with just two currencies in, just to demonstrate what I'm going to show you. So all you do to make a portfolio is you put a little tick in the left-hand box next to the currencies you want, and you click Create Portfolio button. So I'm going to make one with GU and UC in it. Yeah, and here we go. Now we've flicked from simple strategies to portfolios, and it's called Portfolio. So if I double-click in there, I can name it GU UC. Yeah, go back over to simple strategies and check that one, Create Portfolio, and it's made another one, and this is GU, UC, and it's AJ, wasn't it? Yeah. So now I've got a portfolio created, and what it's done is it's just merged those three strategies together. Okay, so we can do exactly the same as before. We can go to every single one of these tabs now and flick over to portfolio and double click that P&L there, and it gives us the net profit of both of those combined. So we've now got a list of trades that contains US dollar CAD and pound US dollar. We've now got an equity chart that contains three equity curves. We have the green one, which is GU. We have UC, which is US dollar CAD. And we have our combined, which is blue. And this is the important one. Yeah. And we're going to look at confluence in a minute as well, or rather correlation. So I can now filter up in the top left-hand column here, top left-hand corner rather. You can see where it says data. I don't know if you can read that, but it says data and it says portfolio. I can switch to sub-equities only, individual currencies or instruments, which is what we've just looked at. And I can also view portfolio only. And that just shows me the entire combined portfolio as if I'd have taken every single one of these trades in order. This is the combined equity chart. I would have stagnated for 152 days trading this portfolio of these two particular currencies. Obviously, this isn't a great portfolio. This is just demonstrating how it works and what it shows you. So, so basically, there you can see the portfolio only. You've got all the same statistics here. Trade analysis. That's for GU. If I go to portfolio, it gives me the total combined information about the portfolio. So suddenly, it's not making money on a Friday again. We've got that data up there, but now holding 18 hours also doesn't make us profit. We can see the P&L by hour, etc. So, you know, it's like any trades that were closed out here didn't make a profit. Why? Probably because the US dollar news was released. Look at the time, somewhere between 3 to 5 in the afternoon. Non-farm payroll, unemployment rates, CPIs, all comes out in that time for the US dollar. It's big movements. Can't do anything with it. But if you've got a strategy that only trades Asian session, and it gets in Asian session and gets out Asian session with lovely big candles, but it gets in Asian session and it gets out in the US and the UK sessions with negative candles, that tells you that if that strategy that trades in the Asian session gets beyond the Asian session, it loses. So shut everything at the open of London and you'll make money. Yeah. portfolio analysis gives you so much more information about what the entire portfolio of strategies is going to do over time and how you can improve all of them at once. So there's two ways to use this. Number one is for portfolio analysis on a single strategy. So for example, here is exactly what we've got. We've got a portfolio of pound US dollar and US dollar CAD trading the same ADR strategy over the same period of time. What you can also do is put together a portfolio of one currency trading H1M5 mean reversion, ADR reversals, a breakout strategy, London breakout strategy, some kind of Bollinger Band strategy that you're running. You could combine an M15 strategy with an M5 strategy with an hourly strategy. You could run the same strategy on a 5-minute, a 15-minute, an hourly chart, combine those together and see what would happen. There's so much you can do with it when you're analyzing, but it's going to give you all the information you need to figure out where the problems are, or if it's something you should just scrap completely. You can combine multiple, obviously, instruments and strategies together. So you could run a portfolio that's got pound US dollar, euro US dollar, and US dollar yen trading ADR reversals. You could combine the opening range breakout strategy from the DAX and the NASDAQ on there. You could also put in an S&P long-term investment strategy. You could find a good oil strategy, a good gold strategy, a good crypto strategy. Combine all those P&Ls together, whatever the strategies are, whatever time frames they're running on, and put them together into one portfolio and see how that would have panned out. And you'll be able to identify areas where things go wrong. Now, this is pretty obvious here. This is trading the pound US dollar and the US dollar CAD. That's the big drop. There was a drop on the pound US dollar and on the US dollar CAD at the same time, creating a much larger problem for you. So what happened to the US dollar there? That is obviously US dollar related, because we've got the pound US dollar and the US dollar CAD doing the same thing at the same time, making a loss. So how can we identify what that problem was and whether or not it was related? So you can come over to this area called portfolio correlation, and on the portfolio that you've got loaded, which is this one at the moment, you can do a correlation by daily profit and loss and hit the compute button, and it will show you how correlated those two strategies are. So green is moderate, high is red. So if you find that on a hour by hour basis, this doesn't work very well with just two strategies, two currencies running in there, but if you find there's correlation between profit and loss, it means that you are over leveraged. It means that the same thing is happening on the same instruments at the same time, causing you the same profit or the same loss. So it will show you if there are correlation between two strategies, and you do not want to run a portfolio of correlated strategies. So if I ran, just trying to think of a way to do it. It's a bit difficult to do now, but if you ran a test, so if you ran ADR reversal strategy, for example, on 5 pairs, and then you ran H1M5 mean reversion on 5 pairs on the same instruments, you will find there is correlation between the trades that they take. So if you look at here, number of closed positions you can test by hour. Yeah, again, not very correlated. I don't think we're going to find correlation on this, because they're, yeah, it's not going to work here. But you can do these tests on a bigger portfolio, and it will give you the correlation between them. So you can identify that that strategy and that strategy, or that instrument and that instrument, are doing the same thing. So if you've got losses, you can remove some of that loss by removing one of those instruments out of your portfolio. So yeah, so that's basically it in a nutshell. Let me just quickly check if there's anything else I wanted to cover on it. Bad performance areas, outliers we've done, portfolio merges, and confluence. Yeah, so that's it. So that's basically everything I wanted to cover on the quant analyzer. So it's something that I use all the time when I'm doing testing. So every time, and again, tomorrow we're going to cover system parameter permutation testing, which is going to give you this type of data. Yeah, so it's going to give you a test showing all the different versions of the strategy that you can run, how many of them were profitable, and all of this data. So what I do is when I find a good strategy, I will then pick a set file or a number of set files, run a test on it so that I get the results out, and then I put them all into here to analyze them. And just basically my process is very simple in here. I come onto this tab and I look through it and just go, looks good. It's got a good strike rate. The drawdown's good. Profit's good. I mean, this is a good test, obviously. There's months where it doesn't work, but I can't really filter those out very much. Although they always seem to be in May and July, not in this case, but you know, if there was 1 month summer trading where it was negative every July, yeah, go back and do a test over another 4 years further back. And if those Julys were also negative, it doesn't work in summer trading conditions. Get rid of July. All of a sudden, all of that loss, whatever that is, so let's say the total of that loss was 15K, that 15K is removed from your P&L, making you instantly 15K better off. Yeah, so this is what it's all about, is trying to identify areas you can enhance strategies with. So I go through that, check everything there is good. I don't really look at the long short analysis, but I do have a quick look at the profitable percentages. What I like to see is that these are the same. So when you're using any strategies like RSI mean reversion, if you're using an 80 level up there, you want a 20 level there. If you're using a 70 there, you want a 30 there. You want everything to be correlated, because we're trading most of the time market structure and market movement, which tends to move in equal moves up and down. Stock indices tend to have more of a bullish bias more of the time. So therefore, you would expect the percentage strike rates to be different on something like that. So it's not used as much by me, but obviously if you're developing a lot more stock index strategies, that's where it would be, where you'd be looking. List of trades, as I say, I come over here and I just flick through. I sort it by opening times. I don't sort it by opening times, sorry. I sort it by close times if I've got a strategy that has a specific time of day. So I do sort it by open time and close time, but only on things like ORB, where it should only be working at a specific time of day. Time in trade, I always do that. There's a beautiful example. There's a trade there for 0 seconds, making a $1.50 loss. If there was a trade for 0 seconds making a $1,500 loss, you can filter that out, or at least go and figure out why the hell it happened. Yeah. 3 minutes, 5 minutes. So these are obviously trades which got in and just at the right time when the news hit, or just when a market movement happened. Don't forget this ADR reversal strategy. We're getting in this case at 125 ADR. It's exhausted. The move back tends to be quite quick. The target, if it's a third of an ADR, which it is in this case, is achievable within half an hour. Easy. 2 15-minute candlesticks. That's all we're looking for. It's doable. Yeah. So, but sorting it by time in trade long, the other way, is like, what? Why did I hold a trade for 2 days? That didn't work. The one that was held for 2 days again, or 1.5 days, none of these seem to work. And these look like big losses as well. So maybe we should be looking at a filter for that. I sort by profit and loss. If you've got, and one of the reasons to use profit and loss filter like this, if you've got a strategy with a fixed stop loss that risks 1% of your account, or risks $1,000, for example. So if you've got a strategy that takes a risk with a fixed stop loss, hard stop loss, and that stop loss should be $1,000. If you see a load of trades in here that are over $1,000, you should be ringing alarm bells. Yeah. If you've got a fixed TP at $1,000 and you see a load of TPs in here over $1,000, that should be ringing alarm bells. Yeah. This is a strategy tester. It does exactly what you've input and what the data shows. There is no slippage in here. There is no variable spread in here. If you've got something in here that's $1,400 and your target is $1,000, there has to be a reason, because it should never get there. 9 times out of 10, you will find that that trade there, that's $1,400, if it should have been 1,000, was on a Monday, because you're going to get gaps. Yeah. So it just identifies alarm bells. Like if you've got something that risks 100 and makes 200 and you've got a profit of 450, it's physically impossible to hit it without some market condition. Now, obviously news was going to slip a lot of this. So you're going to get different results in live testing. This is all back testing is showing you is robustness and identifying areas of problem. Cumulative P&L don't use. P&L in money is the same as profit and loss. So that's it. So I just flick through those and go, is there any real anomalies? Another thing I also check is, I don't do that in here, do I? No. Number of trades, but that's done on here. So again, we want to have a decent number of trades. We covered that yesterday. If I come in here and I go, it took 22 trades in 5 years, it's not a big enough data set, is it? And then obviously I go to equity chart and do the same thing. So you can see this is a beautiful equity curve. So this is a great example of what I was talking about with volatility analysis. We'll cover this tomorrow in robustness testing. This thing works through increasing volatility, decreasing volatility, stable volatility, spiky volatility, very large news event type volatility, which then drops big as well, and reducing volatility. So it's gone through a phase of, holy crap, this is busy. No, it's not. This is normal. It works regardless of what the market does. And again, this is something we cover tomorrow. But stagnation, 127 days, 30, 60, 90, 120. 4 months, didn't make any money. Why? Because it had a whacking great big loss. Nothing you can do about it. What happened then? Go and look at it on your chart. Go and look at whatever that period of time was there in September. We saw, didn't we? There was a massive, that's where the interest rate changes happened. So just a big change in interest rates, which caused this to be totally offsided. And the way the price action worked, it just kept scaling in, losing money until it went, phew, I'm out. Nothing you can do about it. You could have cut it. You could have gone, holy crap, that news means that I'm not going to get out of this trade. Manually, you could have shut it. You could have eliminated it, but we didn't. It didn't. It's there. You can't ignore this data. You can't say, oh yeah, but I would have shut it. No, that's what happened to your strategy. What's important is it recovered it. 127 days after that catastrophic loss, it was back on track. Yeah, this is what this tells you, all of this information. So again, we'll cover a lot of this because there is a bit of a lap over with tomorrow's session here. But so yeah, so that's everything in there. Anybody got any questions on anything in here at the moment? A lot of information for quite a powerful tool. Yeah, need to watch it multiple times. Yeah, it's best way to learn. Well, for me anyway, not everybody's the same, but the best way for me to learn is to play. So run a test. And run a nice big long test like this one that's been run over 4 years. And don't worry about the results too much. If the result is negative, don't worry about it. Yeah. But put it in here, and it's actually analyzing a negative one is not a bad thing to do, because it shows you why it's negative. What's wrong with it? Well, it basically lost every day of the week. Throw it away. Doesn't work, does it? And again, with this tool, not every strategy works on every instrument, and this identifies that for you in a visual basis. Yeah. So we've done a test here. Pound US dollar, amazing. Aussie yen, not amazing. We know why. It's an ADR reversal strategy that I'm testing in a trending instrument. It's not suited to the yen pairs. It's not very suited to Swiss pairs. Aussie New Zealand, sometimes it's not suited to. And one of the things I've done with the ADR reversal strategy is put the Aussie New Zealand test in here and looked at it and gone, most of the time it's really good, but sometimes the Aussie New Zealand goes parabolic and it just doesn't work. If only we could predict the future when it was going to do it. We can't, but there are certain things we can identify, like interest rate differentials, that mean there's a chance it might happen. So you may want to turn it off when the interest rates start to drop on the Australian dollar, which some point in the future they're going to. They're not doing it at the moment. But this helps you see when things aren't working. And one of the most important things is to, and it's a shame, unfortunately, they don't allow you to have the actual instrument that you're looking at. I'm wondering if that is a paid thing. That might be something in the paid version that you get. Doesn't really tell you much, does it, about what you get in the pro version? Oh, this is, yeah. It might be something, but I mean, why I get around it, obviously, because it doesn't show you the equity curve of the actual instrument, is I when I find something going wrong, I basically note when it was. So this was July 2024, and I literally just go over to the chart and go, July 24, what the hell happened? And find out why this strategy failed. Okay, it's bloody obvious. It went into a massive 3-month parabolic trend after this tiny price action. It went, holy crap, boom. Started trending like a lunatic. July 24. Is that the intervention? That was the intervention, wasn't it? Well, no, it wasn't the intervention. That's it. Yeah, it was, wasn't it? No, September 24. Yeah, that was the intervention, wasn't it? July. Yeah, of course it was. So, yeah. I've been talking about it for the last 2 months. Should really know that one. You're not going to survive an ADR mean reversion strategy in something that's parabolic for 3 months with the biggest move it's ever done in its entire life. It's not going to work. And that's why I turned off the N. Yeah. And this is the sort of thing that this thing tells you. Yeah. You know that it's not going to happen. So you stop trading it. But you can't see the future, but you know what impact things have. So, it's a brilliant tool for just visually going, yeah, but that was, and as long as you can filter, yeah, but that was out yourself. Like, for example, if it was the fact that Israel invaded anywhere, basically, on a Saturday, and on the Monday, the market gapped down by 10 ADR, you couldn't filter that out. If on Friday they said, we are going to invade tomorrow, and we know that there's a chance that the markets might gap, if you closed everything out on Friday with a 1% loss and didn't take the 10% loss, you can filter that out. But when is it going to happen? Earthquakes, news events that are just not predictable are often where in your P&Ls you see these horrible big losses occurring. But you have to understand that the good thing about it is it recovered. So if your strategy can survive, COVID is a prime example. You run a strategy pre-COVID and run it post-COVID and filter out January to May 2020. So run a test before January 2020 and run a test from May 2020. If you've got a strategy that's robust in that period of time, both of those periods of time, it's good. If you include COVID and it's still profitable, it's pretty much bulletproof because there wasn't much that survived COVID from a strategy perspective. Trend trading strategies didn't work. Mean reversion trading strategies didn't work. The only thing that worked was a breakout strategy if you just happened to be going short at COVID. Other than that, it didn't work. Yeah. So if you can, and this is what this is all about. I can't predict the future. What's going to cause me problems? Am I aware of them? Yes. Can I recover from them? Yes. Does the market spend anything more than 3 months just not doing what this strategy needs it to do? No. Fantastic. You can't stop that, but the vast majority of the time you're going to work. I have 2 to 3 losing months a year, every year. In the live rooms, I show them all in the live rooms. The reason I do that is because they happen. I don't go, won't use that one. Yeah, that's what it's all about. I know that there's nothing wrong with my strategies, and I also know my strategies are definitely not bulletproof. No strategy is. And I know that because I've done this. Yeah, so it's so important. All right. So go and have a play. It's free. Go and download it. You've got to give them your details. They will try and sell you strategy quant. Do not go down that rabbit hole. I will probably do a video on strategy quant, but you will go in a rabbit hole that you will find it very hard to get out of. And when you get your 20 strategies that you've tested to death, if you get them after 6 months and you run them live, they still won't work. Don't go down the rabbit hole. Just trust me on that one. Might be a stupid question. Is it helpful to know how much margin you used in a trade? Is there a way to see it in backtesting? No, because you don't get that data out of here. It doesn't give you that data. I can build an EA which will store available margin and export it, which is what the position trader EA does. So in the position trader EA, you've got an export functionality which gets a load of data out. I could put in there available margin, but it's just not relevant for position trading, because position trading is, you can't do it on 1 to 30 or anything silly like that. But you don't get that data out. You can in here though, obviously, which we covered yesterday. If you go, but unfortunately you can only do this on every tick. So you've got to set it to tick level model, but you can obviously in here set your leverage and set your stop out margin level. So brokers typically either use 50 or 100. So if you set that to 50 and you set your your leverage, trying to find it, to 1 to 500 or 1 to 30, it would be probably in your case, or 1 to 50 maybe, I don't know, it depends what it is. Basically the strategy tester will stop working. That's all you can do. But one of the things that this will help you with is if you are trading indices, for example, Vitaly, that you were saying about earlier, you have to trade 50 to 1, there you go, on futures, because you haven't got CFDs available to you. You can put that all in here, all of your tests in here, and understand that when that happened, or rather, if you look at the portfolio that I created there, when this happened, this big drop, you could have stopped that happening by not trading one of those two. Doesn't matter which, they both had a big one at the same time. So if you were, for example, trading NASDAQ, S&P, and Dow, yeah, and we get an invasion in Lebanon, yeah, they're all going to do that at the same time. You can stop yourself being margin called, and this will show you that every time there's a big problem, it happens on multiple instruments at the same time. If it doesn't, for example here, this is a great example, look, big loss on that one, but that one made money. Overall though, the loss was bigger than the profit, so your overall equity curve went down. That's about the best you're going to get. But there's nothing that's going to show you what happens after that hard right edge. And this is what everybody's looking for. Everybody's looking for a strategy that they can develop that can predict the future. You can't. All you can do is look at what's happened in the past and look at what the good things and the bad things to do are. And that's what tomorrow's all about, robustness testing, is identifying, when I do this, what impact does it have on the profitability, the risk, the strike rate, the this, that, the other. When I do this, what impact does that have on this, that, and the other? If I do both of them together, what impact does that have? If you can do all the things in very different ways all the time, and they all produce an equity curve that does this, it's robust. And this will visually be showing you what is a robust strategy and what isn't a robust strategy. And then you combine robust strategies together to give you an equity curve that is overall profitable. Yeah, this UC strategy is terrible. Isn't it? Awful. Look at it. It just loses for half a year. And then it just about manages to scrape itself back to a profit by the end of the year. This one, however, is beautiful. Yeah, it has a bit where it doesn't work, but that's fine. But you put them together as one, and overall, together, they still work. Yes, you shouldn't have traded that. But the fact that you did, and the fact that that one did that, means that overall, you came out on top. Now, if we run this US dollar CAD test over another year, you might find that that year, the US dollar CAD went like that and not like that. It just had a bad year. Everything's going to have a bad year. Because unless you know what's coming, you don't know whether this is going to be profitable or not. You have an edge, which is long term, and the edge is proven by this. But you're not going to have a profitable month every month. It's not possible. Yeah. Anybody that shows you a system or a strategy where it just makes money month in, month out and never loses is a load of crap. They're either fixing the results or, I don't know, it just doesn't happen. Yeah. No, pension funds. My parent-in-law's pension fund dropped by 20% in a year. Yeah. It's one of the largest pension funds on the planet. They made a loss twice, 20%. Then nobody is able to see what is going to happen in the future. Not even the biggest pension fund managers on the planet that know economics inside out and have a farm of 60 guys in front of them who are paid over 100 grand a year to do economic analysis and feed it back to them to tell them what to do. They get it wrong. How do you think you're going to develop a strategy that makes money every month? Basically not possible. Everything is going to lose. But if that loses, that loses, that loses, that wins, that wins, that wins, but this wins more than that loses, your equity curve is that. That's all you're after, is something that is long-term profitable, which is why I trade a portfolio approach with position trading. Because when I'm in a squeeze on the euro pound, I'm on a squeeze on the Aussie dollar Swiss, the rest of them are making a load of money. Yeah. And that's what it's about. It's using the market to extract money from what works and what doesn't, wait or limit the risk on it. Yeah, this ADR strategy, this that I was showing this morning in the live room, there was one of these trades which was closed out yesterday. US dollar yen. No, it wasn't a US dollar yen. Which one was it? Made a loss. That one. Aussie dollar CAD made a loss. Look, took an ADR. It went parabolic on news. Took another trade. Took another trade. Took another trade. Made a massive loss, and then it closed out there. Right. So the overall profit on that trade was a negative yesterday. Yeah, it made a loss. However, we made 3.42% because market conditions were not right for Aussie dollar CAD yesterday, or the day before, or the day before. But the rest of them, no problem. And this is the beauty of trading forex. The market tends to move in cycles on specific currencies. So they will start a buy cycle on the US dollar. Again, this is another video I'm going into, but briefly. They'll go into a buy cycle on the US dollar CAD, or on the US dollar rather. So the US dollar CAD goes up, the pound US dollar goes down, the euro US dollar goes down, the US dollar yen goes up, the US dollar Swiss goes up. Yeah, but what happens to the euro, the pound, and the New Zealand dollar during that period? Nothing. Why? Because the market is involved in a buy cycle on the US dollar based on interest rate increases. So they're focusing all of their money, their attention, their risk into US dollar. The rest of the currency is going to accumulation. ADR reversal absolutely kills it. H1 RSI absolutely kills it. Yeah, all the US dollar pairs squeeze and lose money if you're trying to mean revert them in their parabolic. But this pays for that. That's what the portfolio analysis will show you. You run the same test on the same strategy on all 28 pairs, pop them all in a portfolio and look at them. You'll be going, wow, some of those were awful. They made huge losses. Every year they were losers. But overall, the strategy has an edge. That's it. That's what we want, an edge. But the edge isn't going to play out all the time. This is what this tells you. It's absolutely critical to understand how everything fits together in one big lump, and obviously finding why something's not working. But the guy that sold me this strategy traded it for 7 years and it works perfectly. Why doesn't he make a loss? Because he shuts on a Friday. Oh, I keep holding on a Friday. Fixed. Yeah, visual. You can be able to see what's going on. Understandable. I am limited to 50 to 1 on forex. Yeah, exactly what I'm doing when testing. Futures are totally different. Yeah. Maybe in a few years I will move to the EU. Problem solved. Yeah. Or, yeah, I mean, this is the trouble with the US. And this is partly why I've moved over to doing UK only streams, because I've looked at my analysis of videos that I do, my live streams and the videos that I do in general. The stock index stuff gets a lot more US views. Everything else is more European views. And I focus on forex. So it's because obviously there's no hedging in the US, and you're limited to instruments that, you know, we can trade over here a lot more. So unfortunately, there's nothing you can do about that. But try and get an overseas broker that will take US clients. But obviously, you're less protected. So, but we can look at developing strategies for stock indices. Yeah. So, and intraday strategies as well. But obviously, the lower the time frame you go, the harder it becomes to make money. And that is just the way it works. Yeah, the lower time frames are choppy, and choppy time frames are hard to trade because there's more randomness. So as you move up onto hourly time frames, you make more, or using daily movement. Yeah, this is one of the reasons I use ADR. Even ADR reversal strategy, yes, it may execute the trades on the 5-minute or the 15-minute time frame, but the reason it's executing that trade there is not because it's on a 5-minute time frame. It's because of daily movement. This is a daily strategy. It's using daily time frame movement to trigger a 5-minute entry. It's not analyzing the 5-minute chart going, oh, look, the 5-minute chart has done this. And historically on the 5-minute chart, there's a 65% probability of XYZ. Yeah, it's random. The 5-minute, this chart here is random price action orders being placed by banks and institutions. There is no logic. There is patterns you could identify which are algorithmic, but they're not executed in a way that you can find a repeatable edge very easily. When they push hard, they tend to pull back. That is the best strategy I have found in 17 years. Elastic band theory, mean reversion. Yeah, it's a strategy. Again, we're going to do a video on, there's only 3 strategies. We're going to do a video on this. There's only 3 strategies on the planet. You can buy 1,000 courses if you like. Every single one of those is teaching you one of 3 strategies. You only need 3 strategies because there are only 3 strategies. No one can tell me any different. You show me any strategy under the sun, I'll tell you the name of it. Yeah, it's only got one of 3 names. I'm not going to give away the video now, but that is a fact. There's also another fact that the market can only do 3 things. Doesn't you tell me until you're blue in the face that there's patterns forming. I will tell you there's 3 things happening. Yeah. When you understand there's 3 things happening and there's only three strategies, there's a combination of 9 things you can do in this market to make money. If you understand that, you'll stop hunting for strategies. It's very simple. Again, that's part of either next week or the week after when we're going to do trader development session. But yeah. So I think that half of this job, right? Well, I say it's a job, trading, your journey, if you like, in trading. Half of it is realizing that it's all crap. Yeah. If you can get through all the smoke and mirrors out there and get to what, you know, it's like being a mechanic. Yeah. You can see cars going up and down, left, right, and center, but very few people understand why. Yeah. If you get under the bonnet and understand how the engine operates, you suddenly realize that I don't care if you've got a bonnet from a Ferrari, a Mini, or a Lamborghini. Yeah. It goes from A to Z. and it goes in a different speed from there to there, that's it. Yeah, it's understanding the mechanics of why this thing does what it does. And getting through all these people that tell you that they've got the solution to your confusion. You can't have a solution to something that's random. It's random. When you understand it's random and why it's random, it suddenly becomes very clear what you need to do. But, you know, it's all smoke and mirrors. People selling you the same thing over and over again, which I've covered before. Position trading H4 M15 entries is what I'm using. So far, it works really well. But you're going to run out of margin. This chart, perfect, right? You went long there. Yeah. 2 months later, you're still long. You cannot, your margin called here. You wouldn't have got further than that. Your margin called. You're out. You're dead. They've shut your account. You haven't got enough leverage to survive a squeeze with 1 to 50. You have to use an exit mechanism. And that's one of the reasons I've put the timed exits and Friday exits into the position trader EA for people like yourself who have got limited leverage. You have to exit these positions after either a number of trades is taken, which is exactly what that is doing. This never takes more than 3 trades at a time. Yeah, so you'll never get a margin call. However, if you trade pound US dollar, euro US dollar, US dollar CAD, US dollar Swiss, Aussie US dollar, New Zealand US dollar, you will get a margin call, because when the US dollar goes, they're all going to go. So, you know, this is why I say you've got to have a big leverage, 1 to 300, 1 to 500 for position trading, unless you are using an exit strategy which takes losses on a regular basis. Yeah. So limit the number of instruments, limit the number of, yeah. So it's basically you get set up. The best way to do it is the way I used to do it in the live stream, which is monitoring this. Yeah. When this lights up, I go to my VPS and go Aussie dollar CAD, open up, take the next short. Yeah. I now will not trade any more Aussie and I will not trade any more CAD. So then this afternoon, where US dollar CAD lights up like that, I go, that's nice. I'm in Aussie dollar CAD. So you limit your trades to not specific instruments. You limit your trades to the instruments which trigger. Yeah, because we're sitting here at the moment. Let's say you just started a brand new trading account today. You're sitting here at the moment. You're not taking any trades. You will take the first thing that comes up. And you don't know what it's going to be, but one of them will get an ADR hit or an RSI hit, for example. That's what you trade. Yeah. You don't trade Aussie dollar CAD, Aussie dollar yen, CAD yen, Euro New Zealand, pound Swiss, and New Zealand Swiss, because if you trade those and none of them signal this week, like I said earlier, you're not making any money. Yep. There's periods on instruments. And again, you'll see this in here. There's periods on instruments where it just won't trade. And it's not because of any other reason than the market's not moving. Look at the euro pound. Prime example at the moment. We're stuck in this bloody thing. Yeah. Again. But, you know, if it doesn't move like this, right? Yeah. You are not trading. So if you're trading the euro pound last month, you didn't get in until here. Exactly where I got in, right? That's it. You sat there for a month making no money. So if you said, all right, I'm the best euro pound trader in the world, I'm going to sit here. There's a guy on YouTube that streams, owns a brokerage, usually trades the yen, pound yen, I think he normally trades. Yeah, he only trades the pound yen. That's it. I think he trades gold as well now, but he only trades 2 instruments. If the pound yen goes flat for 2 months, what's he going to do? Who's paying his mortgage? Well, we know who's paying his mortgage. It's the people that watch his streams and the people that use his brokerage and the people that buy his course. That's how he makes his money. But that's the reason you cannot be a specialist in an instrument, because if an instrument doesn't give a trade setup, you lose your income, your revenue stream. You can't do that. It's not how it works. Banks don't go, it's a bit flat on the US dollar this month, isn't it? What you made? Nothing. hang on a minute, I've got 3 Ferraris to fund, a £5 million house plus the penthouse in London and the one in Barbados. But the US dollar's not moving. I can't pay any of it. It doesn't happen. You trade what moves. Different things move at different times, which is why this thing is so critical to understand why things move at certain times. Yeah. Big ADRs survived. Yeah. You just got to have all this information. Otherwise you're stuffed. You won't know what to trade. And if you don't know what to trade, you'll just trade for no reason. If you trade for no reason, you're just going to lose all your money, because you have to have a strategy that has proven back testing and robustness testing so that you know it's got half a chance of working in the future. Otherwise, flip a coin. Same thing, isn't it? Right, I will leave you there because it's gone on long enough. Longer than expected. I was expecting these all to last an hour. So far, we've done 2 streams, both been an hour and a half. So shut me up more often and quicker, please. And I will try and figure out how this chat system works, because for some reason it's not showing up on YouTube. And I don't know whether it's just because it's my account or what. But anyway, somebody say heavy stuff. Jules, yeah, heavy stuff. Watching on replay. That's cool. Watch the replay. This is the beauty of it. Watch it as many times as you like. Right. Have a good day, guys. We'll be back tomorrow. Obviously, be back for the normal stream. And then the members one tomorrow, we are going to do robustness testing, which I was anticipating being the longest stream of the week, unfortunately. So I might split it into 2. We'll see how we get on. But we'll go through robustness testing tomorrow, why we do it, what we do it for, and yeah, basically rip it apart. All right. So have a good day. I'll be in Discord if you need me. And I will see you guys in the next one. Have a good one.